Okay, so this video is on financial derivatives. So this is one thing as well that is highlighted according to IFRS 9, that is financial instruments. So we want to get to understand how to deal with what is known as financial derivatives. So financial derivatives, there are many, quite right. You'll find that what they call swaps, can call what they would call hedging, etc. So in this video, we are specifically looking at swaps. So swaps are a type of financial derivative. So a swap is basically an agreement that is entered into between an entity and another, basically for to make frequent cash payments in exchange for receipt of those cash payments as well. So it's just an agreement where you're exchanging one financial instrument for another. Basically, that's that. So how do you account for swaps? So we have a good example here, and I think this will help you appreciate how you can actually analyze a swap and how what actually takes place during a swap. So we have this question here saying that a company A entered into 3-month US dollar 200,000 swap transaction with bank XYZ on 15th March 2020. At commencement of the swap, the following was agreed between the two parties. So you have the following information: the transaction date, which is the 15th of March 2020. You have the amount of this same swap that you want to swap there. That's the US dollars of $200,000. You have what they call the near leg rates and the far leg rates. Those are basically, the near leg is the rates on the date that the swap is taking place, while the far leg is just a predetermined or fixed rate that is determined at the point when you're having this swap. So it's just determined that, okay, most likely by the end of this transaction duration, the rate can be. So it's just predetermined, not knowing exactly what will happen at the due date or the maturity of your swap, but it's just a predetermined rate. That's your far leg. And then now the company prepares its financial statements on 31st December 2020, assuming that the exchange rate as at end of March 2020, April 2020, May 2020 was 22.09. The other one is 22.52 and 22.80 respectively. And at maturity of the swap, the exchange rate was 21.5. So they're asking on part 1, calculate company A's month-on-month swap costs and exchange gains or losses arising from the transaction. Then they're saying advise the accounting treatment of the swap transaction above. So let's understand how we're going to do all this. And the catch or the understanding is, first of all, establish the duration of the swap. It will help you because for the sake of accounting, we'll be counting this like month on month. Yeah, because it's a month on month basis. You want to know by the end of March what's your position in the swap. What amount are you supposed to pay towards your swap and the like. That's why we will need to first know the duration in total, and then from there it will be easier. So establish the duration, right? So this is from where? March. You're starting in March 15. Take note. Meaning from March 15 to June 14. So how many days are there? Quite right, they've told us it's a 3-month swap. But the thing is that as we'll be doing it on a month-on-month basis, some months are not complete, if you get that logic. So it's better to know the actual number of days so that we can be saying, okay, this over the total number of days times whatever swap figure that we'll be multiplying by. That's the reason why we need to know the actual days, because if we just say months, some months are not complete. Like June is not complete, March is also not complete. So the whole point is to get the days. So if you look at March, till the end of March, till the month end of March, there are about 16 more days left, right? Okay, so you add your 16. Let's just say this is your 16 first. Then if you look at April, which is the next month, that would be the entire April, right? So that's 30 days. Plus, if you look at May, that would be the entire May. That is 31 days. May has 31 days. And then if you also look at June, you're only going to be up to the 14th, meaning that's 14 days. So what is your total summation here? 91 days. So establish this first whenever you're dealing with a month-on-month swap. So after you do that, then now you begin, as they had said. But before you do that, because they said determine the month-on-month swap cost. What is the swap cost? What are they talking about? So the swap cost is basically the cost of basically taking into this partaking into this swap transaction. So there's a cost that would be incurred, which actually increases your your swap. So let's say if your swap was 10, maybe it's $10, but in our case, of course, it's $200. So there'll be an additional payment that will be towards this swap, because that's why they call it a swap cost. So for you to facilitate the swap, there will be certain costs aligned to it, and this swap cost is determined by looking at the far leg and near leg that should be multiplied onto the amounts that you're trying to swap with the company. So we said swap costs is equal to far leg minus near leg multiplied by the dollar amount, or any currency. It could be another currency. It's just that our example is in dollars. So times whatever amount that you're trying to swap. Here it's $200. That's what you're going to multiply by. So I would say, what is my far leg? If you check your question, I think your far leg should be 23.29. Let's just confirm that. Yeah, so that should be 23.29, or your near leg is 22.5. These were already given in the question. You do that times the dollar amount. I'm just going to remove the last 3 zeros for the sake of easy computation. So I'll just use 200 instead of saying 200,000. But it's the same figure. Just indicate to your lecturer that you have debased the last zeros for not maybe losing out on marks. Yeah, so multiply this. What are you getting? 158. So the difference of the two first in the brackets, and you now multiply the answer. It should give you 158. But the thing is, which currency will this 158 be in? Will it still be in dollars? Well, of course not, because what you're looking at, what these figures of the far leg and near leg are the conversion rates of the other currencies. So meaning the answer should be in kwacha, which I think they're using here. Yeah. So your swap costs in kwacha is 158. So this will be topped up, I would say, on whatever $200, how much $200 could be worth to you on that date, then plus this, so that I can just say, in other words. Yeah. So this is a swap cost, but they said determine the month on month, because what you've determined here is for the entire duration of the swap that you should pay 158 in total. But they said distribute this on month, because this 158 is for what? It's for 3 months, the entire duration of the swap. Now as they want month on month, so let's break it down as follows. Our swap transaction begins when? In the month of March. So let's start from March. How much will you remit, or how much will be the swap cost just for March? So you would say March. Wait, remember the swap cost starts on the 15th, right? Meaning there are only 16 days left in March till the 31st, over 91 days, which is the total duration of this swap transaction. Multiply this by the swap costs in total. So this is how you're going to apportion it. That's why I said the days are key, because you have the total amount for the entire duration, that's 91 days, and then now you start apportioning. Okay, what about for March? How much of this will be paid in March? How much of this will be paid in April? That's what they mean. What do you get for the first month? So this will give you 27.78. I'm just rounding off all my answers. By the way, these answers are in kwacha, as we said, because the swap cost is in kwacha. So let's just deal with it like that. Yeah. Then now the month of April. What are you going to put for April? So for April it's the entire month. We started April, it's the entire month, because you've seen the transaction started in March. So for April, you take the entire 30 days there to see how much will be paid for April. And then 158 again. This gives you 52.09. I'm just rounding off to 2 decimal places. Go to May. What do you put in the month of May? For May, you will say 31 against the whole month of May times 158. This gives you 53.82. The finally now till the 14th of June, because this is when this is ending. You cannot just say for the entire June. Okay, if you want, you can just say for June. It's the same thing, but you in your mind, you know, it's just for 14 days. So in June, just for 14 days there, over 91 times 158 gives you 24.31. So this is the month on month. That's what they were talking about. It's just as simple as that. The understanding is understand what a swap cost is, like earlier mentioned in the video. Then now break it down month on month, and see what you'll be paying every month, like that. All right, so then they said advise before we do the exchange gains or losses. Let's first advise the accounting treatment, because even the exchange gains or losses, you also have to advise for that one as well. So now let's advise. How do you post this swap cost? Well, this just tests your knowledge of double entry in simple terms. So swap cost, as its name, swap cost, this is an expense first of all. So you will expense this first to your P&L. We can just say you debit the profit and loss account if you want, and credit the liability. Why are we calling this a liability? So remember, you're entering into a swap transaction. Remember, it's a transaction between company A and XYZ to swap $200,000. So you as company A went to get $200, right? So these $200 that you have gotten, of course, you exchanged for something in kwacha, because usually when you're dealing with such swaps, you'll be dealing with foreign currency. You maybe give them kwacha, they give you dollars. So now the fact that you have taken some dollars, which of course at some, in fact, it's like here you've borrowed your in dollars that you come and pay back, of course, at the end of this duration of the swap. So now you've lent that money, so it's no longer, it cannot be an asset to you. No, it's a liability, because there will be contractual cash flows to what you'll be obligated to pay, some contractual cash flows towards this liability. That's what makes this a financial liability in this case to you. That's why they say when you're dealing with a double entry for this one, the swap costs, it has to be expensed. Then of course credit the liability, meaning, we remember what we said, the swap cost is actually an increase of whatever transaction you've gotten into, so it's going to increase the liability of that swap. That's the understanding there. So now after that, you'll be doing this for everything basically. So you would say, for example, to demonstrate in March, you can say, okay, for March, what they'll do in March is they will say 27.78 profit or loss expense, or you can say 27.8 debit P&L, even just put debit P&L, and then credit 27.78 liability, just like that. That's basically the accounting treatment you're advising here. So after you're done with this, you're not done, by the way, you now go to the next stage, exchange gains or losses. So these exchange gains, okay, exchange gains and losses, how do you handle these things? Exchange gains or losses. For the exchange gains, you again deal with them. They said it from the onset, month on month swap costs, and also exchange gains and losses. So even the exchange gains or losses, you look at them in month on month basis. So let's begin. What are you going to put? So for the month of March, they told us that when you're looking at an exchange gain, then you need to understand one thing. You're looking at the rates now, because to know whether you've gained or lost, it's about the rates trading at that time. Okay, so you start with March. They only gave us a hint that at the month end of March, the rate was 22.09. That was the end. They just told us, they just gave us a list that the following respectively. I'm sure you remember those figures: 22.09, 22.52, 22.80. They just said March, April, May respectively. So the first one is for March, the second one is for April, the third one is for May, in simple terms. So we'll be using these same rates as we go on. Just remember them. Yeah, so we're starting at 22.09. So now you're trying to calculate again what would be the exchange difference just for March. So first of all, establish that first trade, which was at the beginning of the swap transaction, which was 22.5. The near leg is the rate at the beginning of the transaction. Then at the end of March, since you're going on month, just look at the end of March. The rate was 22.09. So we were told. So now what is the change or exchange change here, gain or loss here? So multiply this by your total dollar amount, by the way, because you're trying to look at this dollar that you're trying to swap. What will be the exchange gains each month? What will be happening to it? Yeah. As of this first month of March, you will find that your exchange difference will be 82 kwacha. Is it a loss or a gain? That's now the most crucial question that you need to now be able to interpret here. Is it a gain? The question I would ask you is this: you are the one who's gotten the dollars, okay, and you are hoping that this dollar that you've gotten would be gaining you value. Now, what has happened to the dollar first? You've noticed the dollar initially, at the beginning, it was trading at $1 for 22 kwacha 15 ngwe, right? But now at the month end of March, it's now trading at what? 22 kwacha 09 ingwe. Then what has happened here in this case? So this would be an exchange loss. Why do I say that? Like I said, you've got dollars at this point. You have the dollars. Picture it that you have the dollars. Initially, to convert to kwacha, it was 22 kwacha 15, right? Now, somewhat it's reducing to convert to kwacha. Then the kwacha is gaining on you. It's becoming cheaper to change to kwacha now. You've seen that. So meaning your dollar is dropping. That's how you understand this transaction. So if you want, pause the video, maybe even rewind and repeat this part, because this is very key to understand. You might easily put a gain when it's not actually a gain. Remember the instrument you have taken and the instrument you are dealing in. It's key to knowing whether it's a gain or loss, because if you had maybe the other currency, the interpretation would have been different here. Yeah, so that's for March. 82 kwacha exchange loss. Then you move on the next one. That will be April. So for April, you need to start with what is the most recent rate to April. It's a 22.09. Let's establish that point, because you've now left March. You've left March. At the month end of March, it was 22.09. So use the most recent rate to the next one. The next one, it should be the month end of April, which they told us 22.52. Let's follow that. Of course, multiply by your dollar amount. This is giving you how much? 86 kwacha. Exchange gain or loss, this one. So this is an exchange gain. Why do I say that? The dollar has now gained. Why? It's now becoming more expensive to convert into kwacha. If you've noticed, initially at the month end of March it was 22.09. Now converting to kwacha. All right, so now this is a gain, as earlier explained, for the fact that you've noticed that it's now becoming more expensive to convert to the other type of currency there. That's how you can know that, okay, you've gained in value. So it's just about what you're trading in, and then it can be easily known on what's going on. So now what will happen in May? Well, May will start with the 22.52 as the most recent rate. Then at the end of May, they told us 22.8. So what would be the exchange gain or loss here? There will be 56 kwacha. Is this a gain? Yes, it's a gain. Reason? You can see that's still becoming higher and higher, or more expensive there. Next, June. What will happen in June? June, of course, will start with the most recent rate of 22.8, but they gave us a hint that the rate at the end of the transaction was 21.5. They gave us a hint in the question towards the end. So when you multiply by 200, this gives you what? You should get about 260 kwacha. So this figure, is it a gain or loss? So in the final year, for the final date there, you have a loss, exchange loss. Why? It has dropped. It's now becoming cheaper to convert into the other currency now. So that's how you can be able to tell. Now advise the accounting treatment. Well, where do you post exchange gains or losses? So you have an exchange loss. Let me just demonstrate. If you have an exchange loss, the understanding is you should debit the P&L, that is under expenses. When they say debit the P&L, the understanding is you're taking into expenses. Then go and credit the swap asset. What do we mean by the swap asset? So the swap asset is remember, this is now your swap. This $200 is your swap. It's like it's your asset. It's a swap asset. It can either be gaining or losing, because remember, this amount that you have taken, the moment you take currency is always subject to what? Fluctuations in rate. So if the rate is going, if you're getting a gain in those fluctuations, then your dollars, being like your assets, are gaining. So that's why when we say credit that swap asset, then you're going to reduce. It's going to be dropping in value. That's the thing. So if we say debit the swap asset, you'll be increasing this asset that you have in that dollar amount. Then if it's an exchange gain, go and what? Credit the income statement or P&L. Yeah, then debit the swap assets, and that's it. Basically, that's what you'll be doing through and through for these demonstrations of these. Yeah, so then they just, I think, advised on the last part to comment. What comments can you give now, given this transaction reaching maturity date? What has happened, in short? So you'll find that when your swap transaction was starting, right, the rate at that time was 22.5, and then you are trading your $200. When you convert this, it's giving you how much? Should be 4,500. Okay, then having established that amount, remember that there was a swap cost which you cannot ignore, which we converted already in Kwacha as 158. So this gives you a total of 4,658. At that date, that's how much your swap was valued at, basically. Now take note that at the end they told us the value is 21.5. So they told us at the end of this swap. So this gives you how much? 43. Have you seen that? So there's a difference of about 358. Yeah, so that 358, what do you do with it? That 358 is hinting you to say that your value has actually dropped. Meaning, have you gained or lost in this swap transaction? The answer is you have lost out. So this is how you can actually analyze a swap transaction. These are basically financial derivatives, one of them, by the way, and hopefully this video will help you understand, or at least just get an overview of what swaps are all about.